Welcome to Crypto Talk with Brianna and Scott, where we are living the decentralized life. Join us for the latest crypto news, talk, and analysis. And now here are J. Scott McMillan and Brianna Turk.
Hello. Good morning, good afternoon, good evening. You know, I just noticed that we've been on episode 26 for like 3 weeks now. So I'll get that figured out.
I was thinking in my head at one point about that. I was like, is it really only 26?
Yeah, and it's I don't even know how that got up there. Episode 26. Yeah, we're not far from that. Maybe we are. I don't know. We've been doing it pretty regularly for many months. But anyways, Crypto Talk with Brianna and Scott. So Brianna, I'm Scott. Brianna, how's it going with you this week?
Hey Scott, I am. This week has been good. A lot. You know, I feel like I'm running multiple marathons at once.
Wow.
And then as soon as I complete the marathon, I'm starting another marathon. And I know you know how that goes. Scott and I, for those of you who don't know, well, actually probably nobody knows this, but we're actually a lot alike in the things that we do. Scott's an author, and I just published my first book last week. I did what's called a soft launch and went through that whole process, just kind of told my family and my friends and my little communities, which was amazing. Felt so good to actually have that out and just having that support, which you don't even think about when you're in the process. So having that support has been amazing. And then I've just been working on multiple presentations and things like that have been like running marathons, but it's all been really good. And other than, I'd say, I don't know if I've ever experienced the amount of technical difficulties that I have this week. So I don't know if we have an astrologist somewhere, if it's something to do with the planets, or maybe those aliens in the backyard in Las Vegas. I don't know, but
right.
It's just been a kind of a weird week when it comes to that. But anyways, that's what's going on my end. How are you, Scott? What's your week been about?
Yeah, pretty good. It just made me think when especially tech gremlins, when they come up, it's like something's in retrograde. I'll see that, and it's like, yeah, Venus or Saturn, something's in retrograde. I don't even really know what that means, but that's the cause of it. Something's in retrograde. I don't know much about that, but yeah, it's been good. I have, let's see. You know, it's interesting because it was a lot of the same news again, and I have been not quite marathons, but you said you were like creating presentations and stuff. I, for some reason, was just going down these writing rabbit holes, not books, but articles. And I don't even, with nothing, with no destination in mind, which is kind of weird. Usually when I'm writing, part of what motivates me to write is like I have a destination. It's either publishing a book or I want to get this article out somewhere or create a video. And it started like that. And it started with this SEC thing about Binance. Because I started midweek, I started to really get fired up about this. And part of it was, I started to trade. And as soon as I start to trade, the market, goes down. All of it, all of the market goes down, the crypto market. And, because of this SEC thing, and it really pissed me off. It's like, geez, this one guy is causing, especially like Polygon. We've talked about Polygon before, and I just feel so bad because it's such a great project and it's gotten crushed. And I don't even really know why, although I'm trying to kind of follow it. So I've kind of paused. I'm not really actively trading anything now. But the other interesting thing about this, and I wrote this article, and it's on about to be published in my newsletter. So I'm going to share that today. It's interesting about XRP because, XRP has been in a lawsuit with the SEC, kind of similar, if not almost exactly similar to what Binance and Coinbase are going through now. And it's been going on for years. And so it's interesting to see what's going to happen with that and how it will relate to these two. And I talk a little bit about it. But that was the first thing I traded. It just happened to be the first thing that in my charts I saw some sort of technical reason that I should trade that immediately. And I did. And before all this hit, immediately got stopped out because I think that literally the next day is when the information hit. And it went down, got stopped out, which is fine. I think we talked about that last week. But yeah, anyway, so I wrote that. And the other thing is, we'll probably talk about this too, because it's just kind of on top of my mind. Brianna, get either videos that you see on YouTube or like newsletters or emails, unsolicited type of emails that talk about the doom and the gloom about the economy? The economy's going to crash. The dollar is going to crash. Inflation's going to literally crash the economy, and it's really dire doom and gloom. And then but if you follow my investing plan, you can invest in this, and I'll save the day. Do you ever get any of those or watch any of those?
Yeah. Oh yeah.
Okay.
Yeah.
So I'm because I've actually bought a couple of the newsletters. I go through these cycles where I'm kind of interested in whatever topic, and then I'll see a newsletter or something. And typically what they're doing, at least the ones I'm getting involved in, is they'll have that doom and gloom video. And it always catches my attention because I'm thinking, okay, that's the perfect reason to get into crypto. It's like, if you're really, really nervous about that, and if you buy into those scenarios, then there's no better place than crypto. At least that's my scenario. But some of them are selling crypto products, but a lot of them are just selling, products to invest in gold, products to invest in real estate, anything that's outside of the system or different than stocks, bonds, regular traditional finance stuff. So anyway, for some reason I got into two of these newsletters, and what they do is they give you that thing, and then we have a special report that's going to be the 3 gold stocks that you need to get into to save your life, right? Before the world crashes. So and then they have all these reports, and they're the best things, whatever. And these things are like 45 minutes to an hour long. I mean, they're long, and they're also so damn fake. And it's really funny because you've got the the announcer who's in a suit and tie, and he's at the big studio desk, and he's like, I'm going to bring you this guest because they're going to save your life or whatever. And then they bring the guest on, and the whole thing is so scripted, and yet they act like it's not. And it's really funny because it's so obvious that it is. Some do it better than others. There's just one guy who, same scenario. And he literally is just reading like the teleprompter, and you can see his eyes looking off to the side, and he's literally reading it. And it's horrible. the one that I got into by this Nomi Prinz is I think she does options in Bitcoin. She has this newsletter called I think it's called the Disruptor newsletter. So it's any event that's going to disrupt the current status quo, she's going to offer a solution to it. And so at the end of the deal, you can get a whole year of their newsletter and all these special reports for $49. I'm like, okay, fine. I'm interested. $49. I'll give it a shot. Well, the problem is I do that. I read some of it and then I'm like, okay, yeah, whatever. That's bullshit. Or I forget about it or whatever. And then I forget. And the year later, it bills me for $149 for a year. And I'm like, damn it. I was supposed to
cancel it. Yeah,
cancel it. And I forgot.
Yeah.
And that's,
you have to put the alarm in your phone, like the minute you sign up for those subscriptions. I always do, and I usually don't ever then the alarm goes off, and I'm like, oh, I'm busy, and then I never do it, cancel. But you have to do it immediately.
There's a sucker like me born every minute.
There's something about those though, because they have a whole method to what they're doing, and it doesn't mean that they don't have something valuable to bring to the table, but there's also that level of they want to keep you in as long as you can, so that you've already invested. You're like, okay, I've already invested 45 minutes to an hour into this thing. And then the other thing that you pointed out too, that they talk very scripted. It's almost, it's comical, but then it still can grab you. There's something, there has to be something to do with that too, because so many of them do it. Tika Tawari, I remember being in one of his, I'm like, is this... Are they being serious?
That's right. I know. First time I saw him, that's what I thought too. And I've just seen a bunch of them now. And Tika's in that same group that I bought multiple ones from. And so it's a very, the publisher or whatever it is, they have this style and they run their people through it. And it's sort of the same thing. And the other problem too is you get on one of those email lists and then you get solicited by every other author guru they have in their list. And sometimes it's hard to get off their mailing list. So it's just, again, it's like anything. I sort of know the game. I know that I'm going to get on these email lists or whatever, but I'm willing to take that, because I want that information now. And for me, it's always about, usually always about, I want to see what they're doing and what they're writing about, because I want to write about it or create a video about it or maybe even create a product too. And so that's what I did this time. And this one was all about your favorite topic, CBDCs. What was interesting is because they really push these out to the general public, and they never use the word CBDC because most people don't know what that is. They just said the digital dollar initiative. And she was basically saying, and it was good stuff, good stuff as in like riveting thing, the way she painted like the doom and the gloom of what we've talked about here and we know as CBDCs. And they usually pick a date and say, on this date something's going to happen and you better know what's going on and how to save yourself before this date. So her date was end of July, which is when the Fed Now program starts. So she was tying all this stuff, and she never says Fed Now, she never says CBDC, because she's talking to ordinary people. But she says, look, they're going to create a digital dollar. And then they go back in history and say things like this have happened before, when Nixon took us off the gold standard in 1971, and they tried to, confiscate all your gold, and you had to turn in all your gold, and they weren't even giving you the market value. And she paints this really bad picture, and that this is happening again. So, we talk about this kind of stuff all the time, so it's not like she was telling me anything new. But I was like, I wanted to find out, like, what are these? What's the background data information that she's using to get people interested in this, that they would buy her product to prepare? And since we're talking, I'm all about crypto, and I've thought that from day one. I still think today, crypto is the best place to be. Not all of your money, but you should have some money in there, right? And so I've always been thinking, I want to get this word out myself. I would do it differently than them. I don't like that doom and gloom fake thing. But what I did is I started taking notes and creating a script that basically has some of the highlights that she put in there. And I started writing it. So this is a writing project that I was just going down this rabbit hole. I'm not sure what I'm going to do with it, but I got deep, like multiple pages of a script and I thought, I'm just going to do one of these. I'm going to do a video just by myself, I'm not gonna have a guy interview me because I've all seen other ones that just have a guy reading, which I could do. So I'm gonna probably try one of these someday. I don't know what I'll do with it because I'm not really ready to sell anything, but I'm gonna try that. So that's the rabbit hole that I've been kind of down is FedNow, CBDC, and not so much of the details of it, but really like what are the implications and what can you do about it? And then the other newsletter I bought was, this is funny too. If anybody's seen this, chime in and let me know if you've either seen that one from Nomi Prinz or this. I can't remember this guy, but the thing was called Amazon Rebate Program. Something like that. That's not exactly it. And he kept saying it over, and he's like, "This is the best investment in the world. Most people, richest people have used to invest in Amazon. They sold their Amazon stock, and they got into this Amazon digital rebate program." And he kept calling it like a program, and that it was the smartest investment you could make, and you could make $25,000 to $30,000 a year in this rebate program. And so he goes through his whole spiel. And near the very end, what you realize is what this is that Amazon does not own all their warehouses. They rent them from a lot of places, from a lot of people. And so what this guy is basically selling is invest in this little company that goes around and buys warehouses and then rents them out to guys like Amazon. And basically he's just saying, buy their stock. And yet it was this huge production. And he never actually says that basically this is as simple as buying a stock that has a dividend, which like anybody can go out and do that, but they never say that. And I just find it so fascinating that they have these huge productions. They use all these big words to make it seem like it's the most amazing thing in the world. And it always comes out to be, not always, but usually just this simple thing that anyone could get. You just go on any stock thing and buy the stock. And he made such a big deal out of it. But I bought into it because I'm like, okay, this is interesting. And I really am all about now trying to, I don't know when the world's coming to an end or, whatever these guys predict or when the economy's going to crash or whatever. All I know is that things don't look great for the U.S. economy in the long run, but that could change based on AI. I do think that. So I'm not saying that there's any time frame or time limit or whatever, but I really do want to be in outside of the system investment assets. So anything that is not tied to the traditional finance, real estate, gold, of course, crypto, and a lot of different areas in there. But if I can find something that's tokenized, like these real world assets like real estate and so on that are tokenized, or gold that's tokenized, that I can buy a token, I'm all in for that. So anyways, that's a really long answer to what I've sort of been up to, and it's sort of the rabbit hole that I've been into.
Yeah, it's interesting.
I bet you've been into
some. I don't think.
I was going to say you said you're into some presentations. I bet it's similar because every time we talk about this stuff, we're like, yeah, I've been working on something like that too.
Yeah. And, we talked about this. My presentation was for a King's group that we're in. I don't know if you were at that meeting yesterday, Scott. But
did you present?
I did. I presented multiple times yesterday, and I had technical difficulties with both of them in different ways. So bottom line, I need a new computer. Okay. I need a new computer. Buy my book so I can get a new computer is what I'm
Buy your book, Universe, send her a new computer.
Yeah. So part of our conversation was on central bank digital currencies and what, exactly kind of what you just said, Scott, is that if you don't own anything, you could be in a really bad position when these roll out. And if it's successful, if central bank digital currencies roll out, that's kind of an irreversible thing. Can you move on and forward in different directions? Always. I don't know what that would be. But moving into a digital dollar, the likelihood of going back to paper money, that's probably not ever going to happen. And the importance of owning something now, whether that be real estate, gold, and Bitcoin to me is, I'm looking around while we're having this conversation, like, what do I own? Okay. I got some Bitcoin. And for people like me who don't own real estate, who don't have, then you can own at least some amount of Bitcoin, and that's going to keep you outside of the system. And that's what we were talking a little bit about yesterday. And this wasn't going down it was very laid out there. This wasn't a conspiracy theory rabbit hole. This was all just very realistic that it would be, it could end up similarly to how it was with what we saw during the pandemic, which we're still kind of in. But if you are doing things outside of what they want you to do, or what our government wants us to do, you may not be able to function in society, just like how it was in those times 2 years ago, 3 years ago. But now it's restricting you from being able to be a part of society. If you're fully within those central bank digital currencies, they can simply potentially just shut off your money, or not let you go to this event, or maybe not go to the grocery. I mean, if it came down to it, those are the types of things that you'd be giving up, or certain freedoms. And so if you have assets outside of the constraints of the CBDC, then you're in a better position. And so that's what our conversation was kind of on yesterday. So we're kind of on the same page there and it's the clock's ticking, that's coming down, and it's probably not going to be something that's just like overnight. Okay, all of a sudden everybody is on the CBDC, but it's definitely happening, and it's happening all over the world. So it'll be interesting. And I think, the best so you can prepare, whether that just be a little bit of Bitcoin now. To me, that's my game plan.
Well, when I said tokenized, the other option there, because I don't own any real estate either, and that's why if you tokenize these things, then we can buy fractions of it, and so what this dividend thing started make me thinking about is, again, yield. So I do yield farming for yield, because I don't want to put my money in a bank and earn no yield. So there are stocks that do yield quite a big dividend, and I haven't really looked into that much. So that's kind of down the road for me a little bit. But earning a yield, and then outside of the system, something different than a treasury bond, or a money market or whatever, and then So there's this one platform I'm looking at. I've got it kind of on my radar, and it's basically tokenized real estate, right? And so you can own fractions of whatever, but it's based on the real estate market. And I just, I don't know quite enough about it. And more of those are coming on. There's tokenized, we've talked about this, I think, real world assets, tokenized wine, and, art and that kind of stuff. So I find that real world asset stuff, again, during the building time when we're in this bear market, a lot of that's going on. I think a year ago we started hearing about, the potential for tokenized real world assets on the blockchain, but there didn't seem to be a lot of examples. I think there's going to come out a lot of examples, people experimenting with real world tokenized assets that we can participate in. I think that will be just another way to diversify, which I think will be good. Well, cool. Anyways, so what do you got today? Let's switch over and check out your articles. Boom.
Okay.
Yeah,
we'll go to Binance real quick here.
Okay.
I just saw this a couple hours ago. This was just posted. So as we know, the SEC, I don't know if that was last week now, maybe 2 weeks ago, came down on both Coinbase and Binance. But now we have France coming down on Binance for aggravated money laundering. So we're going to look and see what the allegations are, and then we'll see what CZ, of course, has to say. So Binance French unit is under investigation by the local authorities for the illegal provision of digital asset services and acts of aggravated money laundering. So I don't know. Is there a difference between aggravated money laundering and just money laundering? Sounds intense.
I have no
Okay.
idea. That's
So,
silly.
so what's happening here? Aggravated money laundering by taking part in investment operations, concealment, and conversion, the latter being carried out by perpetrators of offenses having generated profits. That's what the public prosecution told CoinDesk. Binance is registered as a PSAN, or digital asset service provider, with the French financial regulator. The documentary and computer elements collected during the search will now have to be the subject of an in-depth study, says the prosecutor. And that's talking about an investigation concerning Binance, whatever stemmed this, I'm not sure. And then here's what CZ has to say. He said, or actually this part right here is not CZ, this is a spokesperson from Binance that said, we continue to work closely with regulators and law enforcement agencies on all ongoing compliance requirements to uphold high standards. Binance invests considerable time and resources into cooperating with law enforcement globally. We abide by all laws in France, just as we do in every other market we operate. We will not comment on the specifics of law enforcement or regulatory investigations, except to say the information about our users is held securely and only provided to government officials upon receipt of documented appropriate justification. And then following that statement is one from CZ, where he tweeted that he was confirming that there has been a surprise visit by the authorities within the last couple of weeks, but that there are other unnamed crypto firms that have been subject to similar treatment. So he hasn't said who those are, but it looks like they're coming down not only in the United States, but looks like over in France as well. And yeah, I don't know. We don't really have much detail here. Do you have any thoughts on this? I feel like you know kind of more of some things that have gone on between Binance in the past, Scott, or some allegations.
Not so much. Other than I'll list a couple things, but I think what's interesting about that is the EU new law that just came down. I'm not sure it's quite passed yet, but it seems like it will. Seems very favorable to crypto. But what it does is it allows crypto exchanges to still be able to offer cryptocurrencies, but under a regulated environment. And that to me sounds exactly what I think we should have. It's like, especially like Coinbase. And I totally agree. They've been wanting regulation for a long time. They want some rules. They just want them to be unique to crypto. And it really kind of boils down to that issue, as far as I can see, is that it's like, sit down at the table with us. Let's have a discussion. Quit saying that the existing laws work because this is different. And we'll gladly operate in a regulated exchange environment, but let's figure out what that is. And so, and I don't know a lot of the detail about this, about exactly what that law has in the EU, but I heard someone phrase it that way. It's like they've settled on a regulated way to operate as a crypto exchange. And why can't we do that? So an article like this doesn't surprise me because I think all countries are still trying to figure it out. And hopefully, and this is a law, by the way, this isn't a regulation in the EU. This is governmental law. It has to get passed by Parliament or whatever. So that's what we all want. So hopefully that'll be the standard that we can apply to. So we'll see what happens. None of this is settled, but maybe this is the beginning of what we've been asking for a long time, which is, give us some rules. Let us all agree and work on it together, not just like in a vacuum and one person or one organization just say this is the way it is. Let's have laws. Let's have them voted on by Congress and ministries, instead of having one organization and really just one person that is trying to decide the fate of a whole industry. It's just ridiculous.
Mm-hmm. Yes, I'm going about it this way from government standpoint is, just rather than like saying, here's the rules, here's how you have to abide, just, they're able to take millions in fines this way. So that's like why they're going the route that they are, or maybe one reason, but just start slapping down all these fines and allegations versus being like, hey, let's do it this way. But I don't know, that was just a current thought that popped into my head. But okay, let's see what you have, Scott.
Okay. All right, so this is the article I've just written, and really it's no secret that the SEC is trying to take crypto down. I think you could say that the current administration is also. We've talked about that before on this show. That some of the allegations that the administration has also done, but this focuses on really the SEC. And so the first thing I wanted to do is really just. And really, this is how I think. I just wanted to be able to say, okay, what is the actual lawsuits, And so this just details like on June 5th, that was when Binance was sued, and there's a contrast between Binance and Coinbase. Different lawsuits, different things are happening. Basically, in the Binance case, the regulators they also said that they are illegally operating as a broker dealer and offering securities illegally because they're not registered to do so to Americans. And they additionally accused Binance and CZ personally of commingling customer funds with entities owned by CZ. So this is very FTX-like. Again, I don't have the details of this, but it kind of sounds like Alameda Research and FTX and how they were commingling funds and so on. They also contend that Binance's BNB token and its stablecoin BUSD are securities, along with several others. And I just find this interesting. Again, Coinbase doesn't have a token, so they're not in trouble for that. But also, what seems to be sort of out in left field is adding BUSD to the list. Now, why? It's a stablecoin, so. To me, that's a whole separate little governmental regulation issue that they're going to have to deal with. And I just think that it was sloppily done because they throw this in here and now we're like, oh, so you're saying stable coins are securities? I don't think that's probably what they were trying to do here. I don't know what they were doing, but that was the difference in the Binance. On June 6th, the SEC filed a lawsuit against Coinbase, alleging that they had violated federal securities law, which is basically that they're operating as an unregistered broker exchange and a clearing agency, combining the functions that are typically separated in traditional security markets. And this is the big thing, that Gary Gensler keeps saying, is that we have laws already that function for traditional finance, and we think what you're doing is the exact same thing, but you're not registered, and so you're operating illegally these because they're securities. And what's so interesting about that is that, well, let me just say this. That to me that's the whole thing, the whole enchilada, and really all the stuff that's happened in the last 5 years that the SEC has been trying to do, and they're trying to, they pinpoint celebrities that have shilled tokens or done whatever. They're just shotgunning, right? And they sued Kraken and now Binance and then Coinbase, and all of this, and each of them are a little bit different, right? And it gets confusing. Like, well, what are they really saying here? What are they being sued for? To me, it all comes down to one thing, and that is, are cryptocurrencies securities? Are cryptocurrencies securities or not? And what are they? And how can we regulate them? And that's the issue, right? And so it comes down to the Howey test, or in the past. And the question is, I think that they're going to need a new test, but in the past, the SEC has said, and this is a 1946 law. 1946 law. This is, I'm down here in this paragraph in here, I don't know if you can see this, but it says the crucial issue at stake is the classification of crypto assets as securities, which could render operating a crypto exchange in the U.S. unfeasible. It says, I say it's puzzling that the SEC has only listed specific crypto assets as securities. I think there's only 13 in one lawsuit. There's more, and in one there's 13, and I can't remember which one. But we all know that it did list, and I had the list in here. Blah blah blah. But Polygon, Cardano, Matic, a lot of the layer ones. In fact. Why did they pick these 13? What about all the other thousands that Coinbase has said that they have a process that they use, a very specific process to weed out what they think might be securities or things that don't really look up and up, and that they only have, a couple hundred that they actually list of the thousands. And so Gary Gensler picks 13 of this, or the SEC. So again, a lot of this just doesn't make sense. It doesn't seem professional. It doesn't seem thought out. It just seems so haphazard. And to me, it makes the SEC look like buffoons. Anybody that's following this. So back to the Howey test. So the Howey test, it examines what is considered an investment contract. And so it just paraphrasing this, is that back in 46, there was an individual by the name of Mr. Howey. I believe that the guy's name was Howey. And he bought a plot of land in Florida. And he had people invest with him to help him pay and buy that land. And so he had investors. And then he put orange trees on this land. And he grew oranges and was selling oranges. And so the investors were getting, investment capital gains or whatever from that investment. And the SEC sued them saying, look, this is a stock. This should be treated just like a stock. This isn't just you growing some orange trees. These people invested in a contract with you, and you were then going to do work, plant trees, grow oranges, sell oranges. And from the work that you perform, your profits will be shared with your investors. That is what a stock typically is. So that's why they call it the Howey test, because it basically is trying to pinpoint, are you in an investment contract and you believe, so if you buy a stock, you believe that the company you buy the stock from is going to perform a business, a service, that you will be able to share in their profits. That's the key in my mind of this whole thing. So let's just say now we've got a crypto token. So when we invest in cryptocurrency and we now have this token, is there any expectation that we are investing in an entity or a business that's going to have a service, that service creates a profit, and then we get to share in the profits of that service? Well, when I buy a token, I may buy it because, let's say I buy Cardano. Now, I may buy it because I think Cardano is a good technology, but there's no business entity necessarily. I'm not investing necessarily with an entity called Cardano. I am only interested in that asset because of supply and demand. If there's demand because they think that it's a valuable company or valuable blockchain, and a lot of other blockchains build their applications on top of that, it'll have value. It'll feel like value. And that value will push the price of the coin up. That's what I want. I'm not looking for Cardano to make widgets or to make anything. It's simply a provider of a technology, and I can invest in that technology, but it's not like there's a board of directors necessarily. A lot of them have DAOs, but they aren't the same as a board of investors. And so that's how I was sort of parsing this apart, was this Howey test and just in my mind, why I think that it would be hard for a court or anyone to say that when I invest in a token, that I am assuming that there's a contract that I will share in that token's profits. Have you ever heard of a token
Okay, so
other than an airdrop? But like when you buy a token, they don't share their profits with me. Like Polygon, they making
Right.
millions of dollars. They don't share their profits with me in a dividend. Now they can do an airdrop, but no one's talking about that. I just sort of threw that in because maybe I haven't heard anyone talk about airdrops, but that to me kind of seems like a dividend, but maybe not in a lot of ways. But anyways, what do you think about that?
So, okay, so this might be like, this is just what comes to me, because is the word expectation significant? Because if that's the actual term that's used in these, whatever they're called, if there's an expectation
Lawsuits.
for something to go up versus a hope or just a, that's a huge difference.
Right.
If you're
Right. A hope
expecting,
or an expectation.
right,
I think that's an interesting point, but and I just always think back to a stock. Like, if I'm investing in Apple stock, I can expect all I want, but in the end, Apple may or may not show a profit. Now, think about stocks too. If you think about businesses, you always hear businesses and business people say, we made this decision in the best interest of our shareholders. Our responsibility is to our shareholders. That's all they keep saying. There's a very clear implied relationship there that the shareholders, the stockholders, own the business. They buy parts of that business. They own it. And businesses are always saying that. They're always saying that our responsibility is to our shareholders. That's not, no one ever says that in cryptocurrency. That's not what this is about. It's not ownership necessarily. Now, and this is, I haven't heard anybody talk about this, but in my mind, one of the things I thought was kind of cool about cryptocurrencies, and this may muddy the water, hopefully not, was that it did to me feel like if I invest in Cardano or Ethereum, that I'm investing in the infrastructure of cryptocurrency, right? I'm investing in that blockchain. I'm basically saying, not always if I'm strictly trading, but if I'm investing and holding for the long term, I'm saying, I believe in you. I think and hope that your technology will be good for the world. And if it's good for the world, the price of that asset, of your asset, will go up. But it's different because there's no ever implied like that Ethereum is going to share their profits with us. That's never talked about. And so for me, that's sort of the big deal.
yeah, right, I agree, yeah.
Yeah. So anyways, this is why, like I like writing these articles, because I just love to just try to boil it down to the meat of it, because there's a lot of information out there. There's a lot of fear and FUD and, people are all this stuff. And it's just like, I just always love to just, what's the real issue here? And then try to make sense of it. And then come to like what my belief is. Am I on this side or this side? But when there's so much craziness going on and information coming at you in all areas, it's hard to even figure out like, what side am I on? Pick a side.
Yeah, any side. Yeah, well, okay, and that's the thing too with all of it too is if like this is what's in the main thing and everybody's paying attention to this right now, and it's because this is the kind of stuff too that gets people's attention. And actually it was a short from one of our fellow kings, Encore Pathak. He put out this short and he was like, it was right after this happened. He's like, Binance and Coinbase are getting sued by the SEC. And he's like, who cares? He's like, seriously, who cares? Like, and in the long run, and I catch myself too, which I like to follow it because, like, I personally like to follow it because there's just that want to know what's happening. And I do want to get to the bottom of all of this. Like, where's the gray area? How's this going to play out? I want to follow it for that case, but I'm not going to stress over it because in the long run, And if everything in the headlines right now was just what's being innovated, like all of the innovation, and this isn't going to go anywhere. There's so much happening in so many different directions, but then like this type of thing can grab us and be like, oh man, like, and really take hold. And yeah, I'm definitely interested to see like what happens, and hoping for the best when it comes to these centralized exchanges, because I think they deserve to be there.
Yeah.
But yeah, I don't know.
Did,
There's just so much. Oh, this is another thing. Sorry, real quick. I wanted to point this out. I just wanted to say this because a credible source, very credible source, I won't name names, did say something that was kind of significant to me yesterday. And this was somebody who took a course at MIT from Gary Gensler back in the past, before he had anything to do with the SEC. And he was saying, the source was saying that Gary Gensler was super knowledgeable about blockchain, the ins and outs, like very, very in depth. So whatever facade he may be putting out there, or that people may think that they just don't know, I think he well knows this technology, like the ins and outs, very well, based on the like hearing this. Secondly, that he was a huge major proponent of this technology back in those times, like huge, all about it, like was very positive and optimistic about this technology. And when it changed was when he is now a part of the SEC, and this is like a political move, and now he's in this whole political thing, and maybe trying to pave a way to other areas within politics for himself. But this whole language has shifted ever since he's been a part of the SEC. So he's just running along that whole political agenda on that side there. So I just thought that was interesting, that it's changed so drastically between the time of being in politics and not being in politics. And then also just that true understanding, like, he understood it. I mean, he was teaching it, as we know, but he understands it fully. So there shouldn't really be all this gray area, really. I mean, there shouldn't be such a lack of transparency when it comes to
that's even worse, because hearing a credible source who actually took the course and said that he was good, that's what I always wondered. It's like, okay, he taught a course. Well, he must have been a terrible, teacher, or he didn't understand it or whatever, because why would he go against it? So this is even more suspense and sort of like, scratching your head. But so right here, that fits into the next area. It says that the chairman flip-flop. This is a different situation, but exactly the same thing. In 2021, as the SEC chair, when he first got in there, he's like, the SEC lacks the legal authority over crypto assets. However, he has since reversed his stance completely. He'd actually said early on that he didn't think the SEC had the authority to do any regulating in cryptocurrency. Now he's all about it. It's like, it's all about that. There's these emails going around called the Hinman emails. This Hinman was a SEC director that let's see, do I have the date here? No, but he had actually made statements when he looked into Ethereum, and he says that he sees no evidence that Ethereum, with its decentralized structure, current offers, and sales of Ether, are security transactions. So again, there's lots of very direct information that contradicts what Gary Gensler is saying now, what the ACC is proposing. We've even talked before, I know about other governors who totally disagree with what he's doing. A lot of what they don't like is the way he's approaching this and just shotgun, trying to just regulate by, lawsuit. Well, Republican representatives, this, I don't know if this came out before we had our last meeting, but Republican representatives Davidson and Tom Emmer have taken steps to challenge Gensler. They're basically challenging the position of the SEC chair. They want to get rid of the SEC chair position. They've introduced a bill called the SEC Stabilization Act, which aims to replace the chair's role with an executive director who oversees operations. So they want to get rid of Gensler and the whole chair process, because they see that that the current oversight argues against the flawed approach of this regulation by enforcement, which is what Gary Gensler is doing. Speculation. Okay, so this is, I just threw this in here. Speculation suggests that Gary Gensler, his actions against crypto may be influenced by his political aspirations rather than purely regulatory concerns. And that's sort of a nice way of saying that. But, in my personal opinion, this is what makes it so insidious, is that the guy top blockchain knew about the technology. It's hard to believe that you could badmouth and be, so badmouth crypto when pretty much everyone besides him now would agree that blockchain is a force for good, that there's a lot of great things about blockchains. It may not solve every problem in the world, as some people say, but its technology it's world changing. I don't think most people don't, agree with that. So for him to go against that and at least not have some nuance, like say, look, maybe these are securities, but blockchain, blah, 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 and Bitcoin, but this is what frustrates me in politics and I guess even the media now. And I always call it, this is why I personally call this the NRA phenomena. And that is, I bet hardly anyone in the world, if you ask them, is there any reason that the average person should be able to buy a machine gun with a mag clip this big, that would say, yeah, that makes sense. We should all have those.
Right.
Whether you believe in the freedom to protect yourself, that's one thing. So, okay, a handgun here and there. But this NRA phenomena is they had such power and they were so big that they don't want to budge an inch because they feel if they budge an inch, then that's going to just decredit their ability to push their influence and their laws against gun violence and against guns. And so this is so frustrating that a guy like Gary Gensler, it's like he's not going to give an inch and say anything good about crypto or blockchain because he thinks that that'll be something that somebody can dive into and blow up its credibility. And it may be true because that's what the media does now. And it's just a sad state of affairs. I know I'm going on my high horse here a little bit, but this is the crux of why this makes me so mad, because it's like, and what you said is just fits in here perfectly. It's like the guy clearly is just lying through his teeth because he knows there's a lot of good things about blockchain, and yet he never admits that or whatever. Even if the argument is, are cryptocurrencies securities? Then let's just narrow it down to that and, at least don't try to throw the whole crypto industry under the bus. Because personally, I was thinking about this, Brianna, because I don't want to be a hypocrite, sometimes I am, unknowingly, but it's like, if I have to admit it, I don't really care if they regulate crypto as a security, as long as I can still buy and sell it and do what I need to do as a retail investor. And as long as I don't know if it's the stock market has been around forever and we invest in stocks and it works fine, right? Now there's a lot of corruptness and there's a lot of problems in traditional finance that hopefully blockchain and crypto can, alleviate. That's one of the great things about it. But the issue, this little issue of, is this a security or not? I don't really give a damn. Just regulate it. Give me a way to trade in it. That's my personal opinion. And why we have to make such a big deal out of all this stuff, it's like, just regulate it. Just figure it out. Coinbase and really a lot of the crypto community has wanted regulation. We want to know what the rules are so we can follow them and not have to be looking over our shoulder all the time. I can only imagine what it's like to be a blockchain creator right now. Be horrible. Always wondering, am I going to get busted? Am I doing the right thing or whatever? Yeah.
And that has totally taken away from innovation. And that's the sad thing during these times.
Right.
You think about what would be going on right now if it weren't for all these worries about and maybe that's one reason why it's been this way for them, is to kind of stunt the innovation. I mean, it's already out of their hands so far when it really comes down to, as we know, decentralization. And I just feel, my questions whenever I hear all of this stuff is, what is this leading into? And like, I feel like they're really trying to get their control over it and scare people out of it as much as they can, before people wake up and actually act upon the fact that of what decentralized finance is. And I feel like they're just trying to do whatever they can to get their grip on it, because it's completely out of their control when it comes down to decentralized finance, and that's the next thing. So I feel like they're just trying to do whatever it takes to be able to get a control where they can. And people are still just running around, going buying their lattes every day and like watching Netflix, not having any idea about any of this stuff. And I don't know. We'll see. We'll see what happens. Because when it comes down to DeFi, which is going to be the next segment or at some point, one segment of all of this, and that will be after central bank digital currencies. So maybe. I'm just going through the timeline of all of this in my head, because that's a way people.
That's hard. The timeline thing, right? Because I wish we kind of knew this stuff, but it's like, they may start to go after DeFi before the CBDC thing, because I don't know, you might have some other information, but from what I hear from the insiders, as much as I know, a US-based CBDC is still a long way out. I don't know what that means, how many years or whatever. So my guess is they'll actually probably try to tackle DeFi sooner than later. But the way I like to position that conversation is, I think what they're doing is just trying to delay as much as they can so they can catch up, so they can kind of get their hands on it, get their ducks in a row, whether it be the CBDC or whatever. I think it's a delay tactic in a way. But again, one thing that I think a lot of us think is that the government operates in this hive mind, like they're all in agreement and they just move in a straight line. I don't think that's the case at all, right? I think they're all doing their own thing, and so they don't know what the left and the right's doing. Clearly, there's some organization every once in a while, but for the most part, and I think Gary Gensler, because of this political motivation, is really a one-offer, and to have laws, try to get rid of him because he's such a disruptive force. I don't know. Seems like he's kind of rogue. But no question, does the government, and we can't forget that big business, traditional finance, doesn't want crypto either, which is always a funny thing, because you have companies like BlackRock, which is an article that I was going to talk about maybe today, who are dying to get into the Bitcoin ETF. They just put their application in to be able to sell a Bitcoin ETF. And you've got the big guys want to get in. They're investing in Bitcoin. They want to get in, but they also don't want to lose their control. And DeFi specifically is what is going to really affect them. Like, they're all about Bitcoin. They think it's a great asset. And I think a lot of them agree Bitcoin's great. But talk to them about DeFi, and I'm not sure they're going to have such a great a viewpoint.
And maybe, who knows, maybe these fees are just they want to get fine all these companies as much as they can so they can get into Bitcoin. I mean, who knows? That's been in my mind, because what do you do? I mean, if everybody gets into Bitcoin and you're like the sitting in all of this debt, if you're a country sitting in all this debt, you don't have any Bitcoin hardly. Then
that would be a good story. Like, I could just see that headline, like U.S. invests in Bitcoin to pay off its debt. That'd be a hell of a headline.
Or, the U.S. citizens put their money in Bitcoin, and all of a sudden, the citizens are the ones ahead of the government,
right?
Who are in trillions of dollars of
debt.
There,
I can see that headline. It's like, we citizens say the hell with the debt. We aren't going to be saddled with that debt. We're in Bitcoin.
Yes.
So back to the article here.
Oh yeah, keep going with this one, and then if you have that other one, that would be a good one with the once you're done. But this is good. Yeah, keep on going.
So the XRP. So I thought, well, part of the reason of this article was to define sort of what the set is, narrow down to like what is the issue, the main issue here. And then what are some of these other issues? Well, you've got XRP, as I mentioned before. It's been around. It's been, the same thing. They're selling a security. And now interesting about this, because they're not an exchange really, but they had a token that they created, which this made more sense in a lot of ways. It's like they went after a token creator and said, look, this token that you've created is a security, which is kind of different than the Coinbase one, which is an exchange, which, especially in Coinbase case, they don't have their own token. They're just exchanging, providing exchange so that we can buy and sell crypto. So very related, but it'll be interesting to see. And you can bet, as talking about here, is the judges, they're looking at this case. There's some theories out there. I didn't put this in the article, but there's some theories out there that say that the SEC put the Binance and the Coinbase lawsuits out there now because they think they might lose the XRP case, and they wanted to get some momentum, I think, just to stir things up, and we'll see what happens. There's no guarantee that the XRP case is going to come to a close, because I've been hearing that for years. Oh, it's just about to an end. It's like they're going to lose, they're going to win, they're going to lose, they're going to win. I have no idea. But they're connected. There's the same issue. Is cryptocurrency a security? So what are some of the consequences? Well, the biggest one for me was the suckers, knocked down the market just as I was about to invest in it. It's like, it sucks that one person can have that much, control, over that. But those are markets, I'm not that upset, because markets are markets. It happens in the stock market all the time, news that affects it. But you've got Robinhood, and I think there's a couple others that have actually already said they're going to delist cryptocurrencies, the ones that the SEC put on the list. So right there, we've already got these consequences happening. Fear, like, why is Robinhood doing that? Why? Why do that now? But they are, at least they said they're going to. So now I think that is either put sell pressure on already, or will continue to put some sell pressure on there, because a lot of people use Robinhood. A lot of people that don't have a clue about cryptocurrency use Robinhood. The last part here is that, this is a civil lawsuit, so even CZ, this isn't a jail time thing like FTX, but we'll see how it transpires. I also want to just make it clear that the Binance lawsuit's different in that there's a lot of CZ and Binance kind of shenanigans that they're being accused of. We'll see what happens. I think it's good for Coinbase, because I think it is pretty clear that Coinbase is sort of the up and up, kind of the kind of the good actor here, American, company, and they want to work by American rules, and it could work out really, really good for Coinbase if they win in this endeavor. I think they'll come out smelling like a rose. Either way, I think they're in a good position, because if they go offshore, like I watched a really good, I don't know if you've seen that video that the Wall Street Journal, that interview he did with Wall Street Journal, and he's like, we don't want to leave America. We're not going to leave America. We're an American company. We want to stay here. We want to work with you. I think Coinbase has actually come out looking better than ever. I think they're being positioned by a lot of people that could easily, like the Washington Post, paint them in a negative light. Like they're kind of standing up to the man. And that the man is unruly and kind of just picking on these guys, and they're going to stand up to him. So hopefully that'll be the case. So really, that's basically it. Just really wanted to get that out there, just kind of collect my thoughts on like what this is, and then see how things move forward. But like I said, the conclusion there is I think Coinbase is looking good. They've got the money to like Ripple. Probably we'll have to put in more than Ripple if this thing takes a couple years to do. But I feel good about having Coinbase be sort of the voice for this. The problem with Binance, even though there's just more unknowns about Binance, little more unknown stuff about them. So I'm not saying they're good or bad. They've done a lot of great innovative things, I think, for the industry. And they because they had freedom, they weren't trying to play by the U.S. rules from the very beginning until they decided, I want to do Binance U.S. If they really did commingle Binance US funds with Binance funds and stuff too. That was, to me, that's just stupid because they blew up their cash cow. Like if they knew they had to create a separate entity in the US, then why not be very careful and not lose that potential income? So hopefully they're not that stupid and they'll be proven that Binance US didn't do anything wrong. But I find it, I find it hard to believe that CZ and Binance in some ways in other parts of the world didn't do something that's going to violate, that got back to U.S. holders that was kind of like FTX. Because again, FTX was, in a different country too. But they just had a lot of U.S. customers that got burned. And so that's why they ended up being sued by the U.S. government. So that is all about that. What was the other article you're talking about? I did have something on BlackRock, if that was the one you were talking about.
Great article, by the way. And are you going to put this anywhere other than?
Yeah, I'm going to put this in my newsletter.
Is on your newsletter, correct?
Which I haven't published it yet, and I don't even have, my newsletter is kind of a new process. I used to just put it up on my website, my crypto for the rest of us, but I created a whole nother newsletter because I like newsletters. I don't know what it is, but it's a separate thing. You got to be on my email list, to get it or whatever. But
I do too. Yeah. So when you do come up with that, make sure you let us know how to get signed up for that.
Yeah.
When we're done with this call.
Yeah.
I need your help on how to get the email list going, so you can help me with that. Yep. The other article, if you have the one on BlackRock, and I think it has to do with Coinbase, is it this one? There was one released today, and I don't have it saved, but it did have to do with their with BlackRock and wanting to use Coinbase for, I think, what you're about to say.
Yeah.
Here. So,
that's not the gist of the article using Coinbase. And in fact, I don't even know if this article, talks about that. But what's cool about that? So the issue is that what is an ETF and what is a trust, like the Bitcoin Grayscale trust? Actually, I heard this on the Pomp podcast today, actually. And they had some guests and they were talking about this very specifically. And because I don't think a lot of people understand that really, because they're like, well, there's this Bitcoin Grayscale trust thing. It operates, or it started to operate kind of like an ETF. So basically an ETF, what does it stand for? Anyways, it's basically where you've got like gold. There's a lot of gold ETFs. So basically you have gold, but if you don't want to buy gold, the company that creates this, they have the gold and they create it's kind of like a token, but in those cases, they're stocks. They're traded on the New York Stock Exchange or different stock exchanges. And basically when you buy the ETF, the gold ETF, it follows the price of gold. So it's just like you're buying gold, but you don't have to buy the gold, right? People have been wanting to do this with Bitcoin forever. So give us a stock that we can buy on stock exchanges that follows the price of Bitcoin. And as Bitcoin moves up and down, the price of the ETF that we own will go up and down too, right? Does that make sense?
Exchange, I just Googled it. Exchange traded funds.
So it's basically, so it's taking, an asset and making it exchangeable. It's kind of like when I say tokenized, sort of the same thing, but that's in the crypto world. In the traditional financial world, if you want to do that same thing, you create a stock that that can be traded on the U.S. stock exchange that mimics. It's also called a derivative sometimes, right? It mimics the underlying asset price. And so they tried to do this. A lot of people have been trying to do this for years, and the SEC has always said, no, it's too volatile. We don't want there to be a Bitcoin ETF. So Grayscale came out, and you created a trust. So it's technically different because they buy the Bitcoin and it's held in a trust, but then people can buy portions of that trust. And then, as the value of the trust goes up or down, then your value of whatever you purchased in that goes up or down with it. Sort of the same thing. The problem is you had to be a accredited investor to get into the Grayscale Bitcoin Trust and to a lot of these trusts. You have to have a ton of money, right, to do this. So this is why Grayscale has actually sued the SEC to offer a BTC ETF. I'm getting caught up in word salad here. But the SEC said no, because they also would like an ETF. It's simpler. More people can get access to it. Well, BlackRock finally got into the game. They are the big kahuna when it comes to ETF. They own like 30% of all the ETF markets out there. And they're very savvy about when they do this. So it's kind of a big deal that they jumped in, because they probably wouldn't have applied for this if they didn't think they were probably going to go their way. So Grayscale has a lawsuit against the SEC. People are thinking now maybe Grayscale is going to win that. Of course, if they win, Grayscale will then offer a Bitcoin ETF. BlackRock will probably then also get one. So this is good news for anybody, not so much for you and I or whatever, because we're comfortable. We know how to invest in Bitcoin, custody in our own wallets and so on. But for a lot of people that don't know that or want to get involved in wallets and all the decentralization and of that stuff, they can just go and buy an ETF, and basically they're exposed to Bitcoin. And that's a good thing, because some of those people will start that way and then they'll think, I want to get more involved in this, and they'll come over to kind of what I would consider like pure decentralization, owning your Bitcoin in your own decentralized wallet. Because when you buy the ETF from whatever broker, that asset, that stock lives on that exchange. And that's one of the cool things, it's cool about cryptocurrencies, is that you can buy all the cryptocurrencies you want and put them in your own custody wallet, and nobody can control those. Stocks don't have anything like that. You invest in stocks and bonds, you're at the mercy of those exchanges and whoever custodies those assets. Now you can ask for stock certificates to be mailed to you. I don't know the detail, actually. I hadn't thought about it much until just this moment. Does that mean you totally custody your own stock certificates? Maybe, maybe not. But with cryptocurrency, we know it works that way if you take it off the exchange and put it in your wallet. So what you were saying, just to wrap this up, and then I'll get your comments. When BlackRock, when they applied for this, they will buy their Bitcoin. Coinbase will be the custody of it. Coinbase will purchase, custody the Bitcoin. And when you buy an ETF from BlackRock, Coinbase is actually underneath holding those assets, the Bitcoin. So that's cool. That, again, on top of being sued and all this stuff, BlackRock, one of the biggest asset managers out there in traditional finance, wants to get into Bitcoin. They want to get into this ETF, and they want Coinbase to custody it. So what does that tell you about Coinbase and about the big guys like BlackRock? They want in crypto and they trust Coinbase. So again, you just boil it right back down to one guy with a political agenda.
I know, and it tells me that it might be time to invest in the Coinbase stock, which
yeah.
BlackRock listed Coinbase as its official Bitcoin custodian, as you said. But I just want to emphasize that, because it's the timing of this for them to announce this too.
Yeah.
And it says that BlackRock has an existing strategic partnership with Coinbase. And the companies announced last year that Aladdin, BlackRock's institutional investment platform, would be connected to Coinbase Prime for crypto trading and custody. So that's actually really big. That's huge.
Yeah, it is. And it's so confusing. I'm left here with the feeling that I'm even confused. It's probably confusing for our listeners, for a lot of people. It's just confusing when you've got, you hear, well, traditional finance, they're threatened by crypto, so they don't want crypto to happen. And then you hear, well, the government, they're threatened by crypto because they won't have control over your money, and the Federal Reserve and so on. You'll be outside their system. They don't want crypto. And yet, at the institutional level, it seems like lots of institutions want in on Bitcoin, at least, and they want in on crypto. They probably want in on in their own terms, but it's confusing, for the average person. It's like, well, what do they want in or not, or and so, and then these lawsuits. It's just damn confusing. But I'm personally always trying to bring it back to, I'm a retail investor. I just want to be able to make a decent return on my yield. So yield farming for me. I also want to be able to trade in crypto. I want to be able to invest in a crypto asset, hold it in my own wallet, so that no matter what happens out here, if a nuclear bomb hits something or whatever, I can get my assets, and that could be my saving grace, right? If something really black swan-ish happens, and right now all this other stuff really doesn't affect that. Even if the U.S. were to somehow, shut down the exchanges for a little bit or forever or whatever, there are ways, the backdoor ways that I can get in. I can always get to my crypto. I'm a little concerned about being able to move all my fiat or whatever eventually into crypto if I needed to or wanted to, and I'd have to find a backdoor. There are a lot of decentralized exchanges now, like Uniswap, that allow you to connect your credit card and move your fiat in there. So there is that. That's really all I want, right? And I want the freedom to be able to do that. And so I do have to bring it back to that. And currently, nothing I see that's happening right now, other than maybe closing down the exchanges or making it harder, really affects that. So I always have to remind myself, as a retail investor, I still have access to my crypto. I could put in everything I have into crypto right now. I'm not going to do that because I believe in diversification. But and there are still so many unknowns about it, and that we can get wrapped up in it, and it's kind of fun, to do that and to be in the know. And like I said, the reason I wrote this article is I wanted to try to shift away as much of the external stuff as I can and get to the meat of one or two issues that I can hold in my brain and say, okay, this is what I believe in or whatever, and this is what I think really is the issue. And I'll just tick them off again. One man with a political motivation is causing a lot of grief, and that that Coinbase, I think, is our champion. Not saying Binance is bad, but I think I'm not as that there could be some issues there, but I'm not that concerned. Really, I like my Coinbase, and I keep some of my funds on Coinbase, but mostly I do custody my own Bitcoin, Ethereum, and other cryptos that I own. So, what say you, Brianna, for the last word?
Yeah, I mean, I think I like to kind of come down to those like scenarios too, like if shit hits the fan kind of scenarios. It's just fun, and it could, you never know. But same thing, I want to make sure that that I'm outside of the system, and also, and that's what I'm going to bring forward next week. And I was going to touch on it this week, but it didn't fit in, and it's going to fit in next week perfectly. So just kind of what Web3 is all about. And a lot of the questions that you have, if you're somewhat of a doomsayer, or if you look at the like worst case scenario type things from time to time, there's a lot of questions like, okay, so now you have all of this Bitcoin or you have this crypto, now what are you going to do with it? And that's where decentralization comes in, and peer-to-peer messaging, and decentralized social media, and just Web3 in general. So I'm going to touch on that next week. And
good.
That's, try to kind of bring it down, start at the basic level so that it's understandable. And those are the ways that you can then, be able to interact with people without that intermediary at all. And it does answer a lot of those questions and get rid of a lot of those fears, if it's the end of the world. So,
well, the Web3 thing is interesting that you bring that up, and that'll be fun to kind of explore that world. And I'm kind of throwing that on there like Web3. I look at that as sort of like what can be built on blockchain, and what can we do to take the internet from where it is now, to where it could be based on blockchain. And that's another reason why we fight for this, or why we kind of sometimes get riled up, I think, too, is because like the future, the near term to midterm future, is Web3 and all the stuff that blockchain can do. And crypto is going to be a main part of that. It's only a part of it, though. There's all this other great stuff that kind of is being pulled down by some of this legislation and some of this stuff in a way, because, the market's down. I know there's always going to be bear and bull markets, but, we're going to see as the bull market comes, which I think will be next year, might not be at the beginning, but sometime next year, the tone will be different. There still may be some of this stuff going on, but there'll be so much hype and euphoria that it'll have a whole different, feel to it. But at the end of the day, because what we'll see all this Web3 stuff kind of really start to people aren't worried again, and they're not worried about this kind of stuff, and they're euphoric. And the Web3, there's a lot of fun stuff. There's a lot, social media, the messaging, the connecting, the metaverse, all that kind of stuff that is so exciting that crypto and blockchain really connect to it, right? So that'll be fun next week when we can kind of explore that part of it, which is, I think it's, the future. It's not there yet. It's coming. It's coming. And it's exciting.
Yes, it is. Well, cool.
Right.
Well, for everybody who's watching and tuned in today, thank you. And we're live every week, 12 p.m. Pacific time. Join us. Chime in the chat. Let us know what you think. And again, thanks for being here today. We appreciate you all and look forward to seeing you next week.
All right. See you guys. Bye.